Hello, good morning. Yeah. How are you doing, guys? Oh, that's good. I'm also doing well. Yeah, so um let's do some quick analysis. Leo tuta trade gold, yeah? So we shall do some quick analysis. Then execution tutafanya at the New York session, okay? So as for now, let's do some quick analysis and get a setup and tutakuja execute your time, okay? So yeah, this is gold daily time frame. So looking at the daily time frame, now yesterday we had this bullish day. So with a bullish day yesterday and being on a Wednesday, probably we created the low of the week. Yeah, so using that also model, one shot one kill. So this probably was the low of the week. So if yesterday was bullish, so today I'm calling for a bullish day. So my bias today is also bullish on gold, okay? So I'm thinking bullish on gold. So with yesterday confirming bulls, so today I'm thinking bullish also, okay? Yeah. So as for the target, I'm targeting this high, all these highs. So previous day high. First off, I'm targeting these the daily order block opening price right here. So that's my first target. The next target will be up here, the dealing range high, then probably get to this buy side liquidity, previous week high. Okay. Yeah. So with that, so the daily gives me bias. So today I'm thinking bullish on gold. Okay. So yeah. Yeah. So yeah. So we switch to 4 hour. Okay. From daily, we go to 4 hour. So in 4 hour, and now we are in this bullish dealing range between this low, dealing range low, dealing range high. Remember, we are bullish, okay, overall. Higher, lowest low, lower high, lower high, a shifting market structure right here. So this is an higher low, higher high, higher low, higher low, breaking market structure break right here. Then this is an higher high. So currently we're in this bullish dealing range between this higher low and this higher high. And so dealing range low, dealing range high. So we are within this dealing range, this low, this high. So a bullish dealing range, okay? So we are concentrating right here. So this is where we will concentrate right there. So our focus is in here, and in here we are hunting for buys, okay? Yeah, within this dealing range low, dealing range high. So this is the major dealing range, okay? Now from there, from 4 hour, since we have a dealing range, dealing range low, dealing range high. Now it's a bullish dealing range, right? So we switch to 1 hour. All right. So, and in 1 hour, this is that same dealing range low, dealing range high. So the major dealing range, okay? So dealing range low, dealing range high. Yeah, right here, okay? So yesterday, as we have seen on a daily time frame, we had a bullish day. So this is that yesterday's rally, okay? So what gave us this major rally? Yeah. So the market swept some form of sell side liquidity. This was Monday's. So you look down here. So this is Monday's low at 10. So Monday, Feb 26th. Yeah. Monday it was Feb 26th, right? At 10, we created this low. It was swept yesterday. So we mark out sell side liquidity. So within this dealing range, okay? Within this dealing range, this bullish dealing range. So we are bullish overall. Although we have a bearish order block, but we have not broken below this dealing range. So unless we break below this dealing range, I'm still bullish. Yeah. So dealing range low, dealing range high, a bullish dealing range. Okay. So this is market structure. Okay. Everything starts with market structure, and niliwaambia market structure is the king and liquidity is the queen. So we start with the market structure, right? So dealing range low, dealing range high after breaking market structure up hivyo. So we're in this bullish dealing range. So yesterday we swept sell side liquidity. So it was Monday's low right here. Although after we swept, we still left some form of sell side liquidity to be revisited later. Okay, but as for now, let's focus on the bullish trend, right? So right there, we had the sell side liquidity sweep right here. So I love my liquidities red. Yeah, like that. So this is sell side liquidity. So sell side liquidity, which was swept yesterday, and it facilitated this run. Yeah. So but we also have this sell side liquidity, which is also inside this dealing range. But this sweep on Monday's low facilitated now the bull run, which is currently running up higher. Okay. All right. So, but let's mark the discount raise in that bullish range, dealing range. So later, the market will visit these discount levels later, yeah. But as for now, we are bullish. All right, right there. Let's make it orange, something like that. So yeah. All right. So but we will leave that for now. Let's focus right here. So sell side liquidity swept yesterday, right? Then facilitated this run. So after this run, you see this lower high. This lower high was broken, right? So we shifted bullish right here. Immediately this was broken, shifted bullish. So we call this market structure shift. Of course, you understand what we are doing here. So this is market structure shift. With the market structure shift, this was a lower high. Okay, but remember, we are overall working in this bullish dealing range. Never forget that. This dealing range low, dealing range high. So all these structures are minor structures inside this major structure. Okay. So let me change the color for this one. Let's make it aqua. So this is market structure shift. Yeah. So we shifted bullish here. So this lower high was broken up once after we swept sell side liquidity. So sweep sell side liquidity, market structure shift, and I like to highlight my market structure shift with the bulb. Yanifanyaga nakumbuka. Now this is a market structure shift. So even if I don't plot this line with this, I understand that this is a market structure shift. Okay. All right. Yeah, so market structure shift. So with the market structure shift, we have a minor dealing range inside that major dealing range. Okay, the minor dealing range is this higher low. I mean lowest low. This after market structure shift, this on higher high. So we have a new dealing range between this higher high. So yesterday's high Mhm. So this is another minor. Now remember, this is a minor dealing range because it's inside that major dealing range. Okay, so it's a minor dealing range. So dealing range high. And the dealing range low is that right here. So dealing range low. Mhm. So now we are working inside this dealing range, the current minor dealing range. It's a minor dealing range. It's because it's inside this major dealing range high, dealing range low, right here. Okay, so dealing range, this is dealing range low. So, okay, so inside that dealing range. Okay, so we are focused now here. Our focus today is inside here. Okay, between this dealing range low and this dealing range high. So market structure shift, this an higher high or a dealing range high. Okay, so we are focused in here. Okay, right in here. This is where we are focused on in today. Inside this price action, this is where we are focused in. Okay, and this is where we will hunt for our entries. Okay, this is where we will hunt for setup for buys. Okay, targeting this order block opening price, the dealing range high, which is buy side liquidity, and that previous week high buy side liquidity. Okay, all right. So now from here we switch to 15 minutes. And in 15 minutes, it's where we get the time mapping and our day trading model intact. Okay, so we switch to 15 minutes. So in 15 minutes, now this is that minor dealing range. After we swept sell side liquidity right here. And remember, we trade time-based liquidities, okay? Time-based liquidities. What do I mean? Of course, you know what I'm talking about. Like example, this was Monday at 10:30. Okay. So what do we understand about 10:30? Which sell side liquidity resides there? It's AM session sell side liquidity, which is between 9:30 AM New York local time to 12 AM New York local time. So AM session sell side liquidity, time-based liquidity, which was swept right here. Even this sell side liquidity is a time-based liquidity. Just don't trade liquidity for the sake of liquidity. It's time-based liquidity. Look down here. It's at 9:45, actually 9:30. So 9:30 to 12, that's AM session sell side liquidity. Okay. So since we didn't reach to that, now we're using this Monday's low, AM session sell side liquidity, or previous day low, but it's time-based. Okay. Yeah. All right. We swap sell side liquidity. We had that 1 hour market structure shift up here. And now, as I've said, in this bullish dealing range. Yeah. So we are concentrating in this price action right here. Okay. Between this dealing range low, dealing range high. Okay. So in 15 minutes, we get the time mapping plus the PDRA matrix. Okay. Now the PDRA matrix. So between this dealing range low and dealing range high, we divide it into three. That's premium, and discount, right? So where do we want to get our entries? In a bullish market structure, or in a bullish order flow, we want to get our entries at discount. Okay, tunataka kuingilia discount, right? So we will focus from this middle point. This is the middle point of this rectangle, right? So this is the equilibrium of this dealing range, low, high, 50% equilibrium, right? So we wanna get our entries in discount, okay? In discount, right? And so we buy at discount but sell in premium, okay? So since we are bullish, like the order flow is bullish with this dealing range, the current bullish dealing range, we wanna get our entries in discount, right? So in discount, so from probably at equilibrium, lower, okay? So this is where we will focus and hunt for buys. We will hunt for buys at this segment of this price action between this dealing range to dealing range high. So we will focus and hunt for buys right down here, okay? All right. So discount. So we have got that premium, the PDRA matrix. Now we are remaining with the PDRAs to make it a complete matrix, okay? So in discount, in discount, let's use for a Fibonacci so that we can be precise. So 50% equilibrium, right? Below 50% discount. So we want to buy at discount, okay? So in discount, what do we have of importance? So we will hunt for two main arrays, okay? First, liquidity. Second, inefficiency. And third, probably any other PDRA like order block, mitigation block, rejection block, a breaker block, anything like that, okay? But we will hunt for those discount arrays in discount of this dealing range, okay? So from 50% below, that's discount. So we will hunt for entries below a discount. So what do we have in discount to give us entries, okay? Like what are we hunting for? First thing, liquidity. Second thing, inefficiencies, okay? All right. So we have you see this law. I talked of time-based liquidities. This law was formed at 10:15 yesterday, 10:15 New York local time, okay? So this law is AM session sell-side liquidity, right? 9:30 to 12 AM New York local time. So precisely, yeah, this is the precise liquidity we are hunting for, okay? This law, okay? And this other law was formed at 14. That's I'm sorry for that, guys. I'm sorry for that. All right. So yeah, we proceed. So we are hunting for specific time-based liquidities. So AM session, sell-side liquidity, PM session, sell-side liquidity. Right here. So this is our liquidity, which is at discount. So we are interested in price. We are interested in buys at discount. So first PDRA, in discount is our sell-side liquidity. Okay. So I love my liquidities red. So sell-side liquidity. Make it red. Yeah, so this is our sell side liquidity, which is at discount. Okay, so we want to buy at discount. First array, sell side liquidity. Okay, this is sell center. All right. So next, what are we going to hunt for? Any inefficiency in discount. So looking down here, I'm hunting for any fair value gap in discount. I have this one. I also have this one. Why would I be interested in this one and not this one? You see, this one was visited. How was it visited? We call it institutional order flow entry grid. Just a partial entry into this fair value gap, like just a tip into this fair value gap, then rally. Okay, this candle slow, you look up here. Okay, this candle slow was at 2026.77, right? And the next was at 2026.72. So as you can see, we had just a drop into this fair value gap. So to me, this fair value gap is used, okay? It's utilized. So I'm interested in this fair value gap. So I'll use this fair value gap, which is also in discount, the PDRA matrix, okay? Get our entries in discount. Right there. So that's the only fair value gap which has not been utilized in discount, okay? We want fresh PD arrays, okay? So sell side liquidity relative equal loss right here. Time-based, right? Relative equal loss, which are all time-based. And then we have fair value gap, right? So so we have formulated the setup, okay? Now we have an entry. So this should be our entry, okay? And we have our targets. This is the first target, dealing the minor dealing range high. Actually, above this dealing range, we have daily bearish order block opening price right here. So this is my first target. Okay. Yeah. First target. Then next, the major dealing range high. Okay, which is external liquidity. Actually, this is internal liquidity. Okay, internal range buy side liquidity. Why? Because it's inside that major dealing range. Okay, and now this the dealing range high, it's the external range buy side liquidity. Liquidity outside of a dealing range, the major dealing range. Okay, and if we expand higher, I would be targeting this one, the next level up here. Okay, buy side liquidity, which is a previous week high. All right. It's also time-based. If you go back, you see that it's time-based. According to what I showed you, the times and how we hunt liquidity. I mean time-based liquidities, okay? Either internal range liquidity or external range liquidity, okay? So yeah, we have a setup in discount of this dealing range right here. So this should be our entry, and we have the targets, right? So one more major thing we're remaining with, which is risk management. Where will we put our stop loss? Okay, so our stop loss, I will put my stop loss outside this fair value gap, because the market might decide to stop below and reach for this, yeah, like a week, yeah, a week below into this fair value gap, then rally. So I will put my stop loss. So entry is here, but my stop loss will be outside of this fair value gap. Okay, so you can put it at below this fair value gap. Okay, or at the dealing range low. So this is the safest. Okay, entry here, stop loss below the dealing range low. And then as for the targets up there. So if we formulate that, we will get a long setup. We will get stop loss below there, just below the dealing range. Oh my, am I shaking? All right. Yeah, right there. So entry right here, stop loss below the dealing range low, factoring in this fair value gap. So because the market might decide to stop into this, okay? So now we have managed our risk efficiently. And as for the targets, we are targeting this first dealing range high, but if we I expect it to expand into this bullish order block, bearish order block. First target at 2039.10. Second target at this major dealing range high, which is at 2041.41. If we expand higher, final target, major target at 2044.57. Around there. Okay. So now we have a setup. So we have a long setup. Okay. With the entries here, stop loss below, and target high up here. So you can just go to your trading platform, MT4, MT5, C Trader, and press buy limit orders at 2028 point, the middle point of this gap, 2028.10. Stop loss below the dealing range low at 2024.42 somewhere. And then the first target at 2039.13, the final target at 2044 point, around 2044.64 actually. Yeah. So now, since I'm not a risk trader, because putting pending orders, that makes us a risk entry traders. Okay. So I love to execute live market when the market is, it can be coming back to my discount levels. Yeah. So we will employ our day trading model. So this is where now we employ our day trading model, which is OHLC, AMA, AMD, accumulation, manipulation, distribution. Okay. AMA, OHLC, open, high, low, close. AMA, the power of 3. You can call it whichever, though they have some differences. We will dive deeper and you will come to understand more. So let's utilize OHLC. So today's opening time, midnight New York local time. Opening price right here. So we mark the midnight opening price like this. So I will also change the color for this one. Let's make it aqua. Let's make it orange. Yeah, so this is the midnight opening price. Midnight opening price. Excuse me. So we want to get our entries below the midnight opening price. So I'm sorry about this, guys. I don't know what's happening today. Right. Yeah, so below the opening price is where we want to get our buys. Precisely at discount range of this dealing range low, dealing range high. In discount of that dealing range, we have sell liquidity plus the fair value gap in 15 minutes. So this is where we anticipate the optimal low of the day to form. And this is where we have our entry. So opening price, below the opening price, we have the low of the day, right? A low of the day. All right. So we will hunt for buys below the opening price, right below in discount at this discount arrays. Okay. All right. So then, what else now? So I would expect something like this. Drop, sweep sell side liquidity, and into that fair value gap, create the low of the day, shift market structure, return to that displacement, then rally to our targets. So this is something I would be looking for today. This is what I'll be looking for today. So if we formulate this candle, how do we expect today's candle to look like? Okay, so today's candle would look something like this. So below the opening price, we have the wick of that candle. So below the opening price, we will have the wick up to that fair value gap. I'll change the color for this. Let's make it green for a bullish candle. So this is that wick, the low of the day wick, okay, because it's below the opening price. So we'll have that low of the day wick, this one. So above the opening price, we will have the body of the candle, the body of that daily candle. And I will change the color to green also. Remove the middle line. All right. So today's candle would look something like this. So open, drop to create the low of the day, precisely at this discount arrays. So this is that week. So we will get our entries at the optimal low of the day in this week, the week of this daily candle. Okay. So optimal right here, the lowest low of the day down here. So then the market rallies to create the body above the midnight opening price. We create the body, and into our premium arrays, the liquidity zones, we create the high of the day. So we will somehow sweep the buy side like this, then drop to create the high of the day and that closing price like this. So I would expect today's daily candle to look something like this. Opening price, drop to create the low of the day, rally to create the body, and into our premium targets, then drops closing price. So open, low, high, close, OHLC. So that's how I would formulate today's candle. Okay. So what else do we have now? What are we left with? Our retro Q zones. Okay. So we will hunt for our entries in these Q zones, either in London Q zone, 2 a.m. to 5, 2 a.m. to 5, 2 a.m. to 5. We will get that. This is our London Q zone. So we will hunt for buys here, but actually I will be hunting for my buys in New York Q zone with reasons. I mean, London. Okay. So the London Q zone is the first area to hunt for setups. Actually, I would expect London to drop, create that low of the day. Okay. So someone can sell up here and exit here for a scalp, but don't do that. This is for an advanced technician or a trader, advanced trader. And let's focus on the main order flow, the major order flow, which is bullish. So we hunt for buys. Yeah, let's not counter trade for these retracements. So London, I would expect a retracement into this. Okay. Now my main hunting zone will be in New York Q zone 7 to 10. New York local time, everything at the New York local time to 10 right there. So 7 to 10 New York local time. So this is my hunting zone, the New York, okay? And yeah, so why would I be interested in the New York Q zone, the New York time window, and not in London? It's because in here we will have some high impact news, actually jobless claims, to be at 8:30 New York local time. Kenyan time itakuwa 16:30. Yeah, itakuwa saa 10:30. So that's where we will start our tape reading and execution. But as I've said, you can press the buy limits and the stop loss down here. Then expect a rally from off here. Expect a rally off here. And that optimal entry either itakuwa in London or New York, but my hunting time will be in New York because of that economic calendar event, which is the high impact news, the jobless claims. Okay, so we buy below the opening price into this, and in this Q zone, the New York Q zone, then we can expect a rally of here. Okay. All right, so this is where I'll be hunting for my setups, and precisely at 8:30 news embargo, 8:30 New York local time news embargo, which is 16:30 Kenyan time. Okay, so when the news will be released, so that news will probably give us the manipulation. If the market will have reached here, those news will give us a rally. Okay, yeah. So and that's it. So we have analyzed. So what have we used with everything that we have learned? What have we employed for our system today? First thing, market structure. I said market structure is the king. Okay, usually and every time, map out market structure. Market structure is the king. Then, secondly, liquidity. Liquidity is the queen. All right, liquidity. Time-based liquidity. So market structure, first element of our system. Second, liquidity. Third, the PD arrays. So in this setup today, we have utilized the inefficiency, the fair value gap as our PD array. So the PD arrays, and third, now we get the risk management. Yeah. So entry, risk, and exit. Okay. And fourth, we have employed, fifth, fifth, we have employed our day trading model, which is OHLC. Okay. So yeah, now we are done. We have a setup, we have our analysis intact. We wait for execution, and precisely at the New York session. And why New York session? Because we have some high impact news, which are the jobless claims. It comes out at 8:30 New York local time or 16:30 Kenyan time. And that's it, guys. So you can opt to place your buy limit orders here and stop loss here. Exit first, main target up here, low hanging fruit, then the next here, and forget about the charts throughout the day. Then come back later in New York to just check how your trades are running. But as for me, I like to get in action when the market is performing its magic. I feel it's a bit fun for me, yeah. That adrenaline rush when the market is manipulating traders and fluctuating up and down. Well, yes, I know where the market's going. That's that adrenaline rush. I don't know. I'm addicted to that. So I love live execution. So this entry where you put pending orders, we call it risk entry. Okay. But where we enter at market price, where the market is live and performing its action, it's called confirmed entry. Okay. Yeah, that's it. So relative equalized by side liquidity. And yeah, of course, time-based liquidities, everything. So we have put everything together. Now we wait for execution. So until your masa, that is from 16, mi nitaingia kwa market from 16. So let's say actually from 3:30, okay? So from 3:30 tutatumia link tena tukuwe na session, we tape read and execute and watch price as it forms, yeah? So until that time, mazee, nyi mkuwe na good day and a blessed one, okay? Yeah. Oh, yeah, thank you, you too, yeah, you too, Ruby. Yeah, good day, right?